record this. So currently looking at the charts right now, you will bear with me that this is still we are still very much bullish on Dow Jones, right? Because I mean, all the bullish PDRs are being respected. All the bullish PDRs are being respected. Now, one good thing or one thing, important thing you should note when it comes to higher time frames is that when the market is bullish, right? When the market is bullish, every bearish candle, all right, every down close candle is going to act like a support when price starts to close above it. All right, especially on the higher time frame. It's very much effective on the higher time frame. When the market is bullish, every down close candle will act like a support the moment price closes above it. It's the opposite for a downtrend as well. When the market is going down, every up close candle will become a resistance when price closes below it. Okay, that's why when you look at all these candles here, if you look at all these candles here very closely, you are going to notice that, excuse me. Now, when you look at all these candles on the daily time frame, now you will notice that starting right from where we had this first retest of this other block, or even right down from this point, as we are still bullish, you will notice that from here, this is the first bearish candle that we had, right? This is the second one, third one, and the fourth one. You will notice that this first one, price is not close above it. We had another one till this one. This is the last bearish candle where price closed above it. So this candle becomes a support. Now, this is another one. This is another pullback, but price is not close above this one. So it's neglected, neither this one as well. And then now what happened? This one, price pushed lower, and then the next one, price close above it, and this one. So all these two candles become support. This means this low should be protected. Now, this is highly effective on the higher time frames. It's also effective on the lower time frames, but understand the difference between higher time frame and lower time frame is a time span of a candle. Okay, now look at this reaction. This reaction from this candle, as we just mentioned, took us how many days? We had this first day, 1, 2, and then 3. This is when price took the high. So we have how many candles? 1, 2, 3, and then the high was taken. Now, these are good 3 bullish days for you to trade, or 3 clean days for you to be bullish till price clears out this buy side liquidity. And now this is a daily chart. So what if this was the 5 minutes? You cannot tell me that you are going to be bullish just for 15 minutes, right? This will not be very significant. That's the difference between higher time frames and lower time frames. So when I say it's effective on the high time frame, is because it gives you a bigger span of time for you to be able to frame your setups. All right, it gives you enough time to frame your setup. So what I was saying here is this: we still have price. Now, price closed above this one. This is also the candle that mitigated this one, the last bearish candle from this pullback. Price closed above it, and now we came back to retest it, and it's also acting like a support. All right, it supported price just like I explained, and now we are about to close above this one. Now, at this point, I will be waiting to see how this candle closes. If we actually close above this candle, there is now high probability that price will be coming back up again to clear this buy side liquidity here. We are likely going to be coming back up to clear these buy stops. Okay. Now, you ask me why, if the price closed below this candle, so it should also be a resistance. Now, it depends. All right. Price, when the market is bullish, every down close candle becomes a support. That's what I mentioned. All right. So you should not put it the other way. It will be complicated for you. Now, good. So this is actually what I'm trying to see now on the daily. The daily looks very bullish, and then we have the key level. So this is our key level, this other block here. All right. Now, even if you look at the weekly time frame, the weekly time frame is still very much bullish. You can see how the previous weekly candle closed heavily bullish. But now the thing is, we are trading at all-time high. So which means there is a likelihood that we can start having corrections as from any time. And also look at how this weekly candle wants to close. If this candle closes like this, there's high probability that this will now become a CRT for us, all right? It will now become a weekly CRT. And if we want to look where this high was formed, maybe around 46,700. 46,700. That's also a big key level, right? It's a round figure, round big number. So if this weekly candle closes like this, there is high probability that next week price will want to even target first this low. This is going to be the previous weekly low. Okay, price will likely target this one before taking out the CRT low, and then now that definitely means that on the daily, all right, on the daily, price will not want to take out that high again. And if that's going to be the case, then we'll be looking for what? Key levels on maybe 4-hour time frame that will be around this rejection block here. So let's go now to the 4-hour and see. Let's just assume that we have already closed like this, or the weekly have closed. Now, remember, if we just look at the weekly and then we started noticing that there is high chances that price is going to reverse. All right, so you start seeing that we are framing a weekly bias already on the weekly, seeing how the weekly candle is closing, showing a lot of weakness or indecision. Price could still continue higher because this is an indecision candle, all right? Buys and sells, indecision in the market. But now, we just know that price has overbought to an extent that we might likely start having a deeper pullback. Now, let's see what happens. Let's look at what is on the 4-hour. Now, on the 4-hour time frame, we have a clear structure shift. I think we talked about something like this on the group that, was it our last lesson, Lechini, that when you want to sell, try to see where buy orders are sitting, right? When people sell, let's say someone sells from this other block, he puts his stop loss above this high, right? When you put your stop loss above this high, your stop loss is actually what? A buy order, okay? When you sell like that, and then when you sell from here, you put your stop loss here, your stop loss is a buy order, which means you are buying back what you sold now at a higher price. That's why you're making a loss. All right, if price hits your stop loss, you're going to make a loss because you bought something at a cheaper price and now you sold something at a cheaper price and now you're buying it at a higher price. So when you have this in mind, you'll be able to know exactly where the market will have to go to be able to activate buyers in the market, right? Because there are buy orders that are sitting here in the form of stop losses. So when the market comes and activates it, that gives the market now at least liquid a balance movement, or that makes the market efficient at that time to move, because the market cannot just be moving with one-sided participants. All right, and fortunately for you, there was a key level here, and we did this key level also mitigated this one. So 4-hour has actually shifted structure, all right, and then we have this very clean structure. Now we can now call this one inducement. Okay, we can now call that one inducement, and then yeah. So for me personally, all right, I'll be bearish. If I wanted to sell, maybe I'll be on the sell already on this one like that, and trying to target this low. But if that weekly candle closes like that, then this is gonna be a very good trade to target the CRT low right here. CR low. Okay. CR. Yeah, that would be very good. And plus, we have lots of liquidity line below here. All these relative equal lows, all this trend line liquidity that was here. So I would really love to see price go down to that point. Now, letting it back to your question, at this point, I will not just enter directly from this 4-hour because this order block is quite big and your stop loss might be wide, right? At that point now, you can go down to 15 minutes. And also, this is a 4-hour CRT, but remember the timing now is completely off. Okay, the timing now is completely off. I don't trade at this time. Now we are a 4-hour CRT. Now let me go back again. We also had, this was our 4-hour order block. When you're talking about refinement, if you go down to the lower time frame, you could see that, well, you could actually refine this area of order block maybe to this one, okay, and then now you can extend it to the right. If you're somebody that just want to get in with that confirmation, yeah, you would have refine it to this candle, and then maybe you take that entry like that. But now, somebody that wanted to do to refine the entry before taking, at that time now you'll be looking for a structure shift or a more than one entry closing below like that, and then you take your entry like that with your stop loss above this high. But someone that took an aggressive entry would have his entry here and then his stop loss above. All the two of them, it depends on you, the trader, if you're a conservative trader, it depends on you, right? But now this is a good confirmation to take this sell. But the timing is off. That's what I was trying to make you understand, Lechini. The timing is off, right? If this was happening around London or New York session, it would be good. But now, why am I saying that the timing is off? Let's take, for example, that this weekly candle closes around this area now. Let's just say price plays around like that and then closes somewhere here. Don't you think that there is high chances that Monday will open and then clear out these buy stops before selling? Maybe create the high of the week somewhere around here and then before selling. It's possible. That's why timing is very important, because sessions will leave liquidity above and below. So this is already the Asian session that is going on like this now. All right. The Asian session will soon open around 10 like that, and then from now, that's already when the market is closing. Now, this relative equal highs here, there will be high probability that they will be rated the next day or Monday. Let's say that Monday's candle will open now like this, maybe somewhere here. And even if the candle wants to go down, it's going to trade up to maybe create a high and thereby clearing people that were selling. Okay, and then you move lower. That's why timing is very important. Your timing is very, very important. So at this point, I will not trade because it is out of time, right? But then if we now sell off from here, if we can sell off right down and then close for the week around this point, then there's high probability that this high is going to be protected. All right. So this high now can be an invalidation for the sales. And then next week opens somewhere here now, maybe trades up a little bit, takes this high, and then we engage on more sales to the downside. I don't know if I've answered your question, but remember, we already had a clear direction on the weekly and then 4-hour daily, right? Expecting lower prices, especially how the weekly candle is going to close. But because for me, before I get my buyers, I always wait. Either I'm waiting for the 4-hour to close, or I'm waiting for the daily to close, or I'm waiting for the weekly to close. It's very important. Now, if I wait for today and this daily candle closes like this, what I will likely be expecting Monday to do will be what? To open, take out this candle's high before it sells off. All right. That means I'll be waiting for something like this. We open on Monday. We open here on Monday, right? And then we take out that candle's high, and then we trade back lower like that. Maybe now Monday will close somewhere like that. Tuesday, continue lower. You understand? This will be me looking at how this candle closes, because if this candle closes bullish, it's a sign that there is a likelihood for prices to continue higher. Okay, closing above this one. All right. Now, I don't know if I've answered your question, Lechini. I don't know. Have I answered your question clear? You still have doubt? So in the lower time frame, we just stick with the analysis we had on the higher time frame and search confirmation like OBS market structure. Correct. That's just it. It's simple. But now understand something. When you are going down to the lower time frame, that's where a lot of traders get it wrong, because what? They will go to the lower time frame and they will expect to see something like this. But guess what? When you drop to the lower time frame, you are going to expect something like this. That's what is going to happen on the lower time frame because the market needs these people. The market needs sellers. The market needs these sellers before it can actually move higher. So on the lower time frame, you'll be faced with something like this. So which means if you are dropping to the lower time frame, be more careful or more conscious of inducements and where everybody is going to be putting their stop loss. All right. That's just it. I don't know. Let's go to Euro USD. Maybe I'll try to look at an example. I think we talked about the example on Discord. Yeah, this sell off that happened here. This one. Now I think everybody saw this sell that happened on Euro USD. Okay, everybody saw the sell that happened on Euro USD. Now, my first sell was from this fair value gap here. I mean, it was very obvious that price wanted to move lower. Everything was clear, and then we took the shot, right? But now the market went down, started coming back up with so much momentum. At this point now, you start looking at correlated assets to see what is happening. When you look at DXY at that moment, DXY was showing that there's a probability for it to actually go higher. And now also you have to start looking. Why should price take this high again? Okay. Why should price take this high? And it's the same thing that I explained earlier because when you see a high like this one, this is a session high and it's actually the Asian session high. This high was created during Asian session. I know Asian session have liquidity, right? So people's stop losses are hanging above this Asian high. You see what price did? Just took their highs and then dropped lower. So despite maybe you were not aware of this and then price takes you out, you still maintain your bias, right? It took you out. I actually took this first sell, got taken out at break even because I wasn't expecting such movement again like this. And then when it took me out, I was not aware, or maybe I wasn't expecting it to be such a little stop hunt like this. I was now thinking that maybe you can even take out this high before selling. But what happened? Immediately we saw this confirmation. I think I shared that entry on Telegram, right? I mean, on our Discord. Let me see if I can get a picture of it. Yeah, somewhere here. Let me just copy it. I shared a picture of that. Good, good. This is the picture. This is the picture of the setup. Now, you always know that you keep in mind that you're going to have losses, right? So I got my first entry directly from here, from the opening of this candle. But then this was a former optimal trade entry. This pullback, very nice entry. Or you could have used this one as a breaker because this was actually another block to continue with higher prices, but it failed, right? So the moment price closed below it, that gives you a breaker block entry. And then you enter your shorts again, you target lower prices. Okay. But now this was already some mathematics now on the lower time frame. But if we look at it on the 4 hour, if we look at it on the higher time frame, we just had a key level. Inversion gap plus this fair value gap. That was just our key level. So on the 4 hour time frame, there was no too much noise, right? Fair value gap for lower prices. That was it. Simple on the 4 hour on the higher time frame. But now on the lower time frame, I mentioned that you now have to be aware of what? Be conscious of inducement. Be conscious of liquidity graphs. The market will play around with you. But now, this was actually an SMT movement. If you look at DXY did not take it slow. Let me quickly compare this with DXY. Should I put it below? Let's put it new pin below. What's all right? Put this. Okay, good. So this is DXY. There was an SMT here, and that was even the reason why I had to layer more on this trade because of that SMT. We had DXY, because DXY was supposed to do the opposite of Euro USD, right? But now DXY did not. It did not take out its own Asian low. So it failed to take out its own Asian low. And what does that mean? It means DXY is gaining more strength, right? DXY wants to move higher, and this is now just a trap. That's how you interpret it. So this was just a trap, and DXY is proving to us that it's strong, so it wants to move higher. That's why even at this point, when Euro was coming back to fill its fair value gap, DXY did not, and then it continued higher. If you understand that SMT movement, you wouldn't have even been expecting DXY to fill it. All right, so this would have just been an opportunity for you to layer more on the trade. I think it was the same movement with GU as well. GU had the same SMT. This was also our Asian low right here, and it was also taken out. The Asian high, sorry, on GU was also raided, right? The Asian high on GU was also taken out, and yeah. So that was the SMT confirmation, and with that here on DXY, we had a pullback into this other block for a nice set, very nice, clean one. Price had already activated what? Activated buying orders from those that were selling. Remember, people that are selling, trying to catch tops and bottoms, their stop loss was above this high. And what happened? When the market takes those stop losses, it activates the buys, because remember I said your stop loss here as a seller is actually a buy order. It's a reverse of the position that you're taking. So when the market activates now your buy order, it now has people that are buying. So the smart money now can sell, right? So at that point, the market had to move lower. Now, this was a very nice entry here. Now, this one had no inducement, all right? This one had no inducement, but if we could have had something like this, short pullback to somewhere and then move lower, at that point, you could have a clear high for an inducement. But even with that, there was some inducements here on the lower time frame. Maybe if we go down to a little bit lower time frame, we're going to see it. We're going to see people that started selling. Good. This is where people started selling. All right. These people here, they started selling. And then what happened? Price took them out. Went lower, came back again. Those that were chasing price started putting stop losses here or shifting their stop loss, and they got smoked again or respected this other block and so on. This week was quite an interesting one, and I think at the end of the day, GU gave another very nice CRT here. This one, very clean reversal CRT. Though I didn't participate on this one because I was expecting price to react to this other block, but it did not. Euro USD gave us a very nice one. Yeah, Euro USD tapped into its own POI, and then that was some very there was a nice reason to buy, taking this one to also be our CRT, and then lower time frame entries. Okay, so always keep in mind when you want to buy, always try to figure out where liquidity will be or where the market will want to activate opposite positions for the trade. Let's look at gold. Gold finally took our entry out yesterday. I think I remember telling you guys to close pay yourself here. I think I said that on WhatsApp, right? Because I shared the trade on WhatsApp. Yeah. So when the market traded down, the moment I took partials around this area, when it started coming back up like that, I just went out of the trade because sometimes like that gold is crazy. All right, though sometimes it's crazy, especially when it's trading on its all-time highs. I was actually expecting a deeper pullback from it, at least maybe down to somewhere here around this. Maybe we're testing even this highs. That's actually what I was expecting based on this, even this candle entry confirmation. But then, boom, we are back to the upside. You respected this mitigation here. So we're going to maybe have weekly analysis, I don't know, Sunday. Yeah. So today I'm not talking about where to expect price to go and stuff like that. We're just trying to review what happened, and that was it. US 100, I think I saw some of you guys had some very nice buys on US 100. Very nice. We had this key level. It was a perfect key level because you raided some stops here, and then that was a good key level, and also this was a very nice CRT here as well as a reaction to that key level. I've made tons of videos about CRT, especially when CRT with key levels, and then 15 minute. Let's see, we had a good entry on the 15 minute. Yeah, this is a sponsored candle. This the high price closes above, and you get your entry. But now, with such a big candle like this, you ask yourself if you should take a position like that and cover all the stop losses, and then this is just your TP. I will not take such a trade like that one, right? So what I can do is I will either drop more again to the lower time frame to look for an area that will give me a smaller entry, all right? A smaller entry. We had that shift from here, okay? So if you look closely now, let me just delete this. If you look closely here, you will notice that you have a very nice order block here. So in this case, I'll prefer this one on the 3 minute with my stops below that low. And if I'm targeting now the CRT high, it gives me a good risk to reward ratio, which is 5.88. So it's better like that rather than taking an entry on the 15 minute like this one and ending up with maybe not even up to 1:1. So that's how you can fix that problem. Do we have more questions again? Lechini, do you have any question or any doubt again? Let's talk about it. I saw some people also trading GBP, GPY. So many of you took. Yeah. Okay, good. Someone took some sales on GBP, GPY. I cannot remember who that was. And yeah, this was right here. This hidden fair value gap, and also looks something like a head and shoulder here. Left shoulder hit, left shoulder. Maybe aligning with this hidden fair value gap and that adjustment there can make sense, right? So probably that can be next week. Yeah. Which asset again? Bitcoin. Bitcoin has been selling off. I don't know. Bitcoin have been selling, and we are still selling, right? 4-hour time frame. Now, just with the explanations that I've given, you will notice that this is a key level on the daily time frame. But now, when you're dropping to the lower time frames, you're going to need to understand the market mechanics before you can be able to trade that area, right? So, if you were not looking at the higher time frame to know that we're having a fair value gap on the higher time frame, which was starting at this point, you do what? You'll be looking for another block here to stand against the higher time frame, which is not good, right? And then maybe you look at the other block, you put your stop loss here, and when the market is coming closer to your stop loss, you shift it. At the end of the day, your market will still take you out. So always check your higher time frame first, and then you are patient. If price comes to your higher time frame zone now, you can now drop to the lower time frame and start looking at structure shift back to the downside at this point. This was the highest high, and this is the low that created the high. So if you waited till this low was taken out, you will notice something here, that price has actually mitigated every bearish PDR that we had here, right down remaining this other block. So this will be your entry after price closes below that swing low. And then from there, you hold it back down to what? External range liquidity, which is this low. It's just to understand liquidity on the lower time frame. Okay. Yeah. Now, why is my stop loss here? Somebody should have asked that question. If you look closely, you will notice that what price took out liquidity here and also took out liquidity here. So your stop loss is safe at this high, because people are shifting stop loss to here. They take them out, they shift again, they bring it down again to this one, and take them out, and then they continue lower. So guys, that's it. We're gonna have weekly analysis. Maybe we're gonna stream it on YouTube, so just stay tuned. Sunday we're going to have we're going to prepare for the upcoming week. All right, so I hope you guys learned something new on this lesson today, and I wish you guys best of luck, and